Thank you, Brian, and thank you to the Victorian Building Authority for inviting us to participate in this event. It's an important event and a great opportunity to be able to share information with an important part of the industry. I'm, as indicated, Corey Nugent from the Insurance Council. I'm looking after many of the building industry's issues and the insurance industry response to those issues. And I just wanted to run through some high-level detail for you to be able to understand where the insurance industry is sitting with regard to a range of those insurance matters. So if we look at the insurance industry and the building industry, and we look at what it is that's setting the general scene in insurance speak, we talk of the market in Australia generally at the moment being a hard market. And by hard market, we mean across a range of products that there are various different stresses that play towards driving higher premiums, where products of different types are harder to arrange or place, as we would say, and that is largely driven by there being less global appetite for certain policy risks, particularly in Australia and particularly in the construction industry. And what's driving those things, and from a PI point of view, is that the insurance, and these are talking about the insurance aspect more so than anything else at this point, is that the PI insurance or professional indemnity insurance performance is very poor at the moment. It has been for a number of years. The consumer protection position in terms of what is there and its past performance is almost non-existent, but was also poor. And the general view of the output of a lot of that product, given where there's been recent reports, is that there are some definite needs for improvement in some of that area, which we'll go through. So let's look at professional indemnity insurance and the like. So we hear quite often from a number of different people's consumers, builders, practitioners at different levels that premiums are increasing. So if we have a look at what that means, and we collect this information as the Insurance Council across all of the industry, and we look at that experience from 2016 through to 2020, and what we can see as an average premium, that's increased by 42% over that period. So what you were paying in 2016 is 42% higher right now on average. Now, I know there'll be people listening that will say, I've gone up a lot more than that, or that my experience is much different to that. That is a depiction across the entire industry of where that product pricing has moved. What's also impacted in that area, though, is increased exclusions or harder terms applied to policy. So you might have had a certain area of cover previously that no longer is available, or it's much more constrained, or that your excesses have increased. There's also the dynamic at that point that shows that there are less insurers willing to offer insurance into certain segments of the market. If we look at why that's being changed, so if we look at why premiums are increasing, there's been poor and worsening claims experience over that same period. So if we do a comparison at the same time, we sit there and say the average value of claims received each year at 2016 went from 1.2 billion to last year being 2.7 billion. So when we look at that as a comparative rate, the average rate of increase on claims, or the experience from claims, is that we're paying 118% more in claims in Australia for PI insurance in that same period. So the increase in premiums is nowhere near the experience that is being seen in the rate, the frequency, or the value of those claims. So if we look at the state of buildings in Australia and what's driving some of those sort of things. So we look at a joint Deakin and Griffith University study done in 2019 shows that across Australia, on average, 85% of buildings have identified defects. In Victoria, that's 74%. Of that, 40% relate to building fabric or cladding. There's 13% for fire protection, 11.5% for waterproofing, 7% for structural. Now, where those fall and how those fall into those categories, that's able to be viewed in that report, obviously, and it's quite difficult. But when I look at the cost of that larger segment, the RMIT University modelling in 2017, when you refer that back, it's a separate study, obviously, puts the cost of rectification of cladding alone in the billions. And that's Australia-wide, obviously, but that puts into context for you some of that risk factoring that insurers will look at in terms of pricing and understanding where that insurance position falls. So how do we fix access to affordable professional indemnity insurance and make it so that it is affordable? There's a range of factors, and it was great to hear from Matthew just before, because he was right. The issues in terms of insurance across the building industry, and PI is only one product in that framework. However, the range of issues or responses that are required are quite complex and detailed. So in looking through those things, the first proposition in that space is that PI has been adopted in most jurisdictions around the country as a quasi or actually intended as a consumer protection product. It could not be further from that. It is not consumer protection. In fact, just looking at the name of the product gives you that indication. It is a professional or corporate insurance product designed to protect loss by one professional entity caused by a different professional entity. Expanding the cover or the intention of what PI insurance actually is there to do is a primary cause of why PI insurance premiums increase. The premiums increase because the experience and the exposure created out of the necessity to have the product wider than it's intended is what drives claims, which in turn is what drives premium increases. Measures to address that access or affordability. The first one sitting in there is building reform. And that is quite complex, it is quite detailed, and you'll hear that throughout this conference in terms of what measures are there. But the Building Confidence Report is a critical element of that reform process. The second one is consumer protection insurance. If there is an intention to protect consumers in this space, then a meaningful consumer protection insurance product is required. PI insurance is not that product. So what's the insurance doing to fix some of these sort of things? So in terms of building confidence, the insurance industry, through the Insurance Council, has publicly stated a number of times that the insurance industry fully supports the Building Confidence Report and the adoption of all 24 recommendations on a nationally consistent basis. And I'll go into what that means shortly. But in terms of the reform, it needs to come as a result of a full and proactive review in all jurisdictions by all stakeholders. This isn't a position to put to states or territories that they need to take the full load. It's a whole of industry response, and we all need to be part of that response, whether it comes from defective work or other issues around standards, the building code, insurance, and the regulation. Reform is difficult and it takes time, so it's not something that will be fixed overnight. It's something that we need to look at and involve as many stakeholders as we can in this process to ensure that we do get those points right. I liked one of the comments that Matthew made earlier in relation to there being a silver bullet. There certainly isn't a silver bullet. There are a range of factors that will come into play. And as I indicated, it's a whole of industry solution. The building industry and its many segments need to actively participate in the building confidence reform. So rather than pushing a position that is easier to adopt, we all need to look at this in terms of what will benefit our industry and help it grow, but also see the performance of what we do achieve what it is that we want to see, which is quality buildings that provide a safe environment for its occupants, that have resilience for natural disaster events, for example, and that are sustainable. So we need to do better than the 74 to 97% fail rate in terms of defects that exist across the country right now. Cladding remediation is an extremely important one, and it falls within that PI space, and cladding is an important part of the PI area. In terms of cladding, however, it isn't a simple response. In fact, it is extremely complex. And many of the states are trying to understand how to best address the problem, what are the solutions, and how do we adequately fix those sort of issues. It requires a complete review, not just a facade cover solution. It is not a solution of aluminium composite products or the like are the issue. If we take one product off and put a new one on, we fix the problem. That is as big a problem as what is on the wall now, and from an insurance point of view, will not address the cladding issue in terms of what we currently see. There are industry and government partnerships right now, I know from the Insurance Council and from our members. We sit with government on a number of panels and advisory boards trying to assist and identify where those programs need to come about. But you need to identify an effective remediation program. So sitting there talking through products that do or don't work will not solve the problem. It needs to be a solution that identifies the entire facade construction. So it is the product, it is the application, it is the testing, it's the standards, smoke barriers, thermal details, water, drainage, a whole range of issues contribute to the fire risk relevant to cladding. And it is those issues that need to fall within a cladding remediation solution. At that point, we've got a design position that works and that is compliant and reduces the fire risk to the building and its occupants, as well as the fire authorities that are required to turn up in the event of a fire and try and put it out, that put themselves at risk with product and the like coming off the building. When we identify that solution, it needs to have a future standard development or a code position in terms of industry, and by that it's not insurers and government. It includes all of the professionals that are involved in understanding how these things are put together and how they're intended to apply, but that there's a formal code that's put together in terms of what cladding should be moving forward, so that we do create that safe environment. If we just pull a product off the wall, mandate that it shouldn't go back on, and put a different one on, we have not fixed the problem. We've identified that one product which is flammable is not on there, but we've still not fixed the problem behind the cladding. So in terms of other collaboration, we're working now and we've engaged with, and we're really looking forward to meeting with Matt and his team this week on behalf of the insurance industry. And we're looking to engage much more productively with the Australian Building Codes Board. So we see that as a vital part in not only setting the standards for what are acceptable building codes throughout Australia, but also in implementing advice and positions to the states for management of the Building Confidence Report. Our position, as I said earlier, was related to one where those 24 recommendations needed to be implemented in full and effectively throughout the country nationally, and we see the Australian Building Codes Board is the primary driver and positioned to be able to push that forward. So we are heavily focused at the Insurance Council at engaging with the Australian Building Codes Board, at playing our part in trying to address what those issues are and the many different elements, as Matt highlighted with the silver bullet scenario, identifying what those issues are, that we can have a meaningful voice in helping to establish what those parameters will be to enable insurance to be more affordable, more available, and easier to access with a lot less restrictions. We're also doing the same detail with Standards Australia. So we already have a working committee within the Insurance Council and for industry, working with Standards Australia to understand and better identify what we need to do with standards across Australia to make sure that those standards apply meaningfully, but that they meet the purpose that they're there for. Engagement partnerships with government, we're extremely happy to be working with the VBA and the Victorian government in terms of how we can assist that message and that program of reform that's needed to improve the performance of the industry and build confidence for the many stakeholders that rely on it to either provide employment or living. So again, we see that those reforms that are required are related to the Building Confidence Report and to our engagement in that process. Consumer protection insurance is the vital linchpin at the back end of what we were saying. So PI insurance is currently used to provide professional insurance, and it's used as a quasi mechanism to protect consumers. To give you a logical view of where that sits, it's not designed for consumers, as I've already indicated. For a consumer to enforce their rights, they need to start a legal action which involves any number of people in that legal action. And by the time it has found the person that is ultimately got a PI policy, there are so many individuals involved that when it comes time for a payment to be made, the lawyers or other entities that have been involved in trying to prove that case have used a lot of that benefit or that insurance availability in that program. So it demonstrates why consumer protection is a separate point and needs to be there if it is a proposition that consumers are to be protected by that, rather than having a product that was never designed to provide consumer protection in place as a quasi measure to deal with that. The existing programs, there is nothing on around Australia. There is no current product available for consumer protection for a building above 3 stories. That was taken out in the early 2000s. On the product under 3 stories, there is a product, however, it's largely ineffective, and numerous reviews have found that, which means that we would be more than interested in being involved in that discussion to identify what are the consumer protection mechanisms that would assist ease the pressure on the PI insurance product and enable that better protection to be provided where it's needed. There are other jurisdictions, in fact, looking at this right now and have commenced that discussion across a number of stakeholders. I'd like to thank you for the time and the opportunity today, and look forward to seeing the rest of the conference.